Welcome back. Equities are still sort of slightly in the red, 40 points down on the Nifty. Let's move away and talk about commodities and find out what's going on. Manisha Gupta is joining in as always. Manisha, good morning. So what do you have your eye on today?
Well, I'm looking at the energy prices and some decline, and that should be supportive for the equity markets. But let's find out on what really is happening here. So we have seen sharp decline in the previous week on Friday, and that's how we've started Monday morning as well. 0.5% of decline coming in for WTI and Brent, and markets are clearly looking at the fact that Russia's Baltic ports loading has jumped up by 50% in the month of January as compared to December. So that whole concern about what the sanctions really could do to Russian exports clearly doesn't seem to be deterring the market there. Also, when you look at the Russian exports for the month of Feb, markets are quite positive on that as well. Russia continues to cater to the Asian demand. So even as the international markets are trading at $80 or $85 a barrel, you have the Russian Urals trading at $60 a barrel. And then also there is further discount coming in for the Asian buyers there. So that is what really means that there is availability, affordability, and a big discount that the markets seem to be working with. China's back and with a bang, and we're looking at the equity markets trading on a firmer note. Chinese demand for the month of January has been on the stronger side, and COVID cases from its peak have declined by 70 to 75%. That, of course, is a big positive coming in for the crude oil prices, is the reason you still have prices trading at around $80 to $85 there. The markets will now watch out for the US Fed meeting on 1st of Feb, and you also have the OPEC and allies meeting happening on the 1st of Feb as well. So that is one day that has a lot of events coming in into the markets. And not just crude, take a look at the natural gas prices. We're down by 6% onto this one. Last week was a 20% of a decline. Last 6 weeks, we've seen natural gas prices continue to decline. And within the 6 weeks, 57% of a decline is what we've seen in case of natural gas. When you look at the Europe winter, that continues to be mild. Exports from US have been on the higher side. When you look at the Europe capacity, or rather the inventory holding, that stands as a tall 74% as well. So whichever way that you look, markets are looking at further decline coming in, especially for the natural gas prices. Also, a quick look at the report card for what we've done for the first month of 2023. And while it has been positive for the WTI and the Brent crude prices, gasoline and heating oil demand also has been on the stronger side. But a big sharp cut is what we are looking at in sense of natural gas prices, and coal as well has seen a decline of 11% for the first month of this year.
All right, Manisha, thanks a lot for getting us that complete roundup on what's really going on with the energy prices. But with that, we're going to get into a short break now. When we return, we will get a corporate conversation going on the back of